Heyo. All right. Change of scenery because my foot fell asleep. So for those of you that are joining this Q&A session who may not have been in our live training at 9, I was sitting I'm in my bedroom because, well, on Mondays and Thursdays when I normally go live, I'm either at my office or if I'm home, the kids don't have school. So I have the office area to myself. Plus, we moved the home office and I'm not used to it yet. But anyway, today is obviously not Monday or Thursday. It's Tuesday. And so Maddox is in the office, my son, doing work. So I had to find a place. I found my bedroom and I was in front of, I'll show you, let's see. I was in front of this cool little fireplace looking thing for our last live, but my foot fell asleep, like hardcore. So I have to stand up now, but you guys, my laptop is sitting on, so I don't know if you have one of those lap boards, right? Where it's like, it's hard on the front, but it's like a beanbag on the underneath. And it's stacked on like 4 pillows. So if you topple all of a sudden in the middle of the live, that's why. That's what happened. I am not loving that this is like, there we go. I can tell that we're crooked because the backgrounds or the pictures are crooked. Okay, so this is the weekly Q&A and updates, you guys. So if you have questions, any sort of questions, you got tax questions, tax planning questions, accounting questions, entity setup questions, anything, start throwing them in the comments. All right, I will blabber for a few minutes and I will ramble while I buy you guys time, but this is your chance to get to ask your questions. All right, so start throwing those out there. For those of you that don't know me, I'm Bree Beers of Bree Beers and Associates. Bree Beers and Associates. We do tax planning. We do tax everything. All right. Our goal is to flood you all with free resources and all the tools you need to help you understand and shed some light on the whole you don't know what you don't know, right? And that's kind of the mentality we take from, we understand as business owners and as taxpayers that you don't necessarily know everything, right? That's not, our tax code is hard. Running a business is hard. And so we're here to try and help you guys shed some light on all those unknowns. So every week in one of those tools, let me go back up. One of those tools is our money, tax, and finance group for small business owners. If you're not in there, it's a free Facebook group, you guys. Go ahead and go join it. It's great. You get to watch these trainings, you get to watch the Q&As, but you also get weekly tips and tricks. And there's a lot of good community and engagement where other people are asking questions that maybe you want to ask. So so go join that group. Again, it's free. And all right, so I'm not seeing questions, guys. So I'm going to go, there were a few this week in our Facebook group that I answered manually, or by typing, but I find it harder to answer questions typing versus explaining them with actual words. So let's see. That's me. There were some really good ones. Let's see. Okay, here we go. So Amina asked, I am unclear about the purpose of an LLC. Wouldn't an S corporation cover liability, give separate entity status, and allow for pass-through taxation? What am I missing regarding the difference between the two? We've done a few trainings on this topic, but let's break it down. Let's take it back. All right. So she's saying, if I have an S Corp, do I also need an LLC? Well, so S Corporation, you guys, the election to be taxed as an S Corp is just a tax election. All right. Whereas your entity setup, meaning LLC, corporation, partnership, there's LLPs. I think there's LLLPs. All of those are legal structures. All right. Hashtag not a lawyer. Okay. But your legal structure is what separates, your business from your personal, right? So that if someone sues your business, They can't come after your personal assets. All right. So that's the legal structure of it. And whether you're an LLC or a partnership or a corporation, at any time, whether it's when you set up your business or years down the road, you can elect to make what's called an S Corp election. And what that does is it allows your business, your whatever it is, to be taxed as an S corporation, which in many cases is a tax preferential way to be taxed. All right. And in order to make your S Corp election, you have to have a separate tax ID number. So a lot of you guys are you're operating as a sole proprietor, right? Totally fine. What that means is you're just operating under your social security number, right? You're receiving 1099 income payments to your social. All right. Great. That's a great way to start out. But at some point, you do want to, again, not a lawyer, you do though want to separate your business from you personally, because as a sole proprietor, if you're operating just under your social security number, just as, if I'm just Bree Beers, so, working under receiving payments and 1099s under my social security number, then if I do something and someone sues me, they can go after all of my personal assets as well. It's not limited to the business. All right. And so that's why a lot of people will set up the LLC. Or you create a corporation, or even when you set up a partnership, there's no separation. So, but you set up some sort of business entity, right? And what that says, it's a legal separation of your business from your personal. Okay. And it's not always taxed differently. Okay. And I know we've done some trainings on this. I'll try to dig them up maybe and put them in the comments. But a sole proprietor and a single member LLC are taxed the same way. They just have different legal structures. All right. A partnership is when you start a business with more than one person, right? That's like the definition of a partnership. And so if me and I don't know, LaRonda was on the last training. I don't know if she's here, but if me and LaRonda decide to start a business together, all right, that's a partnership. Unless we make some sort of election or create an LLC or do something, it's just a partnership. Okay. And that's what it defaults to. And then if you set up a corporation, it defaults to a C corporation. All right. So those are the three defaults. Okay. Single member LLC, partnership, corporation. All right. And then any of those entity types can make an S Corp election and get that different tax treatment. We tend to call it preferential tax treatment because it basically takes some of the good from being taxed as a pass-through and some of the benefits of a corporation and kind of mixes them together. But it's not preferential for everyone. All right. Every person's going to be different. Every business is going to be different. Yep. I'm trying to straighten my screen out. If those pictures were on the wall, you would know it was crooked, right? So what is being asked here says, what's the purpose of an LLC? Wouldn't an S Corp cover liability? Well, in order to make an S Corp election, you guys, so this is where I was going with this. So a sole proprietor, meaning someone who operates their business under their social security number, cannot make an S Corp election. Okay. You have to have a separate EIN, tax ID number, in order to make that S Corp election. Okay. And then this, honestly, in terms of if I'm already an S Corp, so let's say I've set up Bree Beers. I'm trying to think. Let's say I set up Bree Beers and Associates. Let's not make this complicated, right? Let's say I was doing taxes under my social, right, as a sole prop, and now I'm like, I want to start a business. So I get a tax ID number and I register with the Secretary of State, and I'm doing my business, and I start a business under this tax ID number, and I call it Bree Beers and Associates. Right? Now that I have that separate FEIN, right, that tax ID number, now if I want, I can make the S Corp election. Okay. I have now created a separate business entity. Okay. And so, So in terms of, so I don't know, in this specific question, it says, what's the purpose of an LLC? Wouldn't an S Corp cover liability given separate entity status? In order to make that S Corp election, you had to have already created some sort of separate entity. I just don't know what type it is in this case. Okay. Let's see. What other questions? I see that y'all are here, but you guys just don't have any questions for me live. So crazy. Let's see. I had a few last week. I just can't remember if they were in this group or my other one. Did I answer this one? Let's see. I did answer this one. Okay. So this one says, I would love for my business to purchase an office space. I was thinking of opening a savings account to save the funds to do so. If I do that, does the business pay taxes on the amount saved each year? Is that considered profit as it wasn't spent within the year? Thanks. Okay. So in this case, the business is set up as a corporation, which some things that'll change. For this, it doesn't. So what this, let's see. I'm totally reading what I said. Okay, so what she's saying now is, if I'm saving money, do I get taxed on it? Okay, that's what the question is. And saving or spending money, let's see, how do I break this down? Okay, so we got to start at the beginning, okay? So we bring money in as income, right? Okay, so let's say I bring in this year $100,000. Okay, I make $100,000 in receipts paid to me throughout the year. Okay, if I have no expenses, and savings is not an expense, I'll talk about that in a minute, but if I have no expenses, then I would be taxed on that $100,000, right? But the expenses that I spend money on in order to run my business and operate my business, bring that taxable income down. So I make $100,000 in gross revenue, and let's say I spend $25,000 on legit business expenses. Okay, now my taxable income is $75,000. All right. However, the one thing that people get confused with, I guarantee that I do not have $75,000 in the bank. All right, because there are so many non-P&L items that affect your cash flow. All right, let's talk about some of those. So if you have any loans that you pay, all right, principal paid on a loan, that's not an expense. That's paying down a debt. All right, so we have our P&L, our profit and loss items, and we have our balance sheet items. Okay, and our balance sheet items do not affect our taxable income. Okay, so taxable income is very simple. Taxable income can be explained simply. All your income minus all of your expenses equals your taxable income. Okay. But again, there are non-cash items. And so what I want you to do, guys, if you use QuickBooks, Xero, any sort of software, there is a report called your statement of cash flows. And this report is amazing, guys. This report reconciles your cash balance to your profit, to your taxable income. Okay. So it says, okay, oh, here's all the cash you have. Well, here's all the non-P&L items that affect your cash to bring you to your income, to your taxable income. Because items that affect your cash, right, but do not affect your P&L, right? So things that either take cash or increase your cash, but don't increase or affect your taxable or your taxable income or your profit, okay? So loans paid. Any principal paid on a loan, not a tax deduction, because loan money you receive is not income. Okay, so if I take out a business loan, if I take out a $10,000 business loan, okay, that's not $10,000 in income to my business. All right, it's called a balance sheet item. It's a liability, and it says I owe somebody $10,000. My cash in was $10,000. My liability created is $10,000. Then as cash goes out to pay that loan, again, not a P&L item. because it's not an expense. All right. Does that make sense? Your interest will be an expense, but principal paid back on a loan and loan funds received, not taxable events. Loans you give out, right? Maybe your business, I don't know why you're loaning money, but maybe the business loans money to you, right? Maybe you're a shareholder in an S corp and you needed to borrow money from the business. Okay. So again, the money, the business pays money out, but it's not an expense. It's a balance sheet asset. It's money owed. Credit cards. All right. As you spend the money, right, the expenses increase, those hit your P&L. Your credit card balance goes up, right? So you now owe $10,000 on your credit card. Then when you pay the credit card, that's not another expense. Okay, you already expensed those things. That's you just paying the credit card balance down. If you have items that you depreciate, depreciation is an expense that hits your P&L, but it's not a cash item. All right, so can you guys kind of see why there's a difference, a discrepancy, a difference between your cash balance and your taxable income? That wraps back around to savings. Okay, if I have $100,000 in my checking account, but I want to put 50,000 of that in savings, there's no taxable event there. All right, there's no taxable event. Just moving money to a savings account, it doesn't decrease your taxable income. It doesn't increase your taxable income. It has no bearing on your tax. Okay. All right, let's see. Ooh, another good question. I haven't answered this one yet, so I'm going to have to go back and answer this. So it says, with respect to strategy of tax savings, is it helpful for a business to try to save any money at all year to year? Or do businesses try to spend as much as they can at the end of the year on potential future needs? I have been using Patriot software for accounting and payroll, so I'm not familiar with Patriot software. So in this case, I know that this client or this member of our group owns a C Corp. And C Corps are different. So we're not going to talk about that right now because most of y'all aren't C corporations, okay? So I'll circle back around to what a C Corp has to do. But, so what she's asking is there any reason for me to hoard all this money in my checking account, in my business checking? Is there any benefit to that? Or do businesses try to spend as much as they can at the end of the year for future needs? So one of the things, right, we all always hear that a business, as a business owner, spend all the money you can because you lower your taxes, right? One thing I really want you guys to remember, though, for every dollar you spend, okay, for every dollar in your business that you spend, okay, you're saving somewhere up to 37 cents. Okay, if you're in the highest tax bracket, you're getting a rate of return of 37 cents on every dollar you spend. All right, meaning because you're paying for every dollar your business makes, you pay 37% in tax at most. Okay, that's if you're in the highest tax bracket. For this client or this person, she happens to be a C Corp. I know that, and the C Corp has a flat tax rate of 21%. So for her, every dollar she spends saves her 21 cents. Okay. We'll circle back to her because C Corps have a few different rules. But so you got to think, like, is that worth it? Now, if you have this crazy abundance of money, right, then maybe it's worth spending. But there's also certain ways to spend it, right? Just going out and be like, okay, I'm going to throw a party for my employees and I'm going to buy this piece of machinery that I don't really need, but I'm just trying to spend as much money as I can. And that's not what we want to see you do. Okay. What we want to see you do, if you're like, I want to spend money, I had a great year, I want to spend this money, put it back into my business somehow, or invest it back into my employees, invest it back into myself somehow, and save taxes while I do that. So I'll give you some basic suggestions, but this right here, if this is your question, this should be telling you that you need some tax planning. Okay, you need to get with us for tax planning because I can give you general ideas of what to do, but A, you're probably not going to know what to do with it because you guys aren't accountants, right? And most of you aren't financial advisors. You're business owners in whatever your business industry is. All right. So, again, if you're like, yes, I'm listening, I'm all ears, tell me how to save money on taxes, then you should be talking to me about tax planning. Okay. Like, no brainer. But circling back around, um, just spending your money frivolously that's not a good business move. That's not so we sit down and we're like, okay, well, you want to keep a certain reserve, right? You want to keep some sort of, whether it's 3 to 6 to 12 months of operating expenses under wraps to keep your business moving and keep your business going if something like, I don't know, a world pandemic happens and closes us down. All right. So that's something that we talk about, like, okay, we want to build that, right? And then we can talk about retirement. Like, how do we maximize our retirement contributions, which sure, they decrease our tax, but more importantly, we're investing money into ourselves for the future. That's the main reason to make retirement contributions, right? It's because you're investing in yourself for the future, and you just so happen to be also minimizing your tax for the year. If there is a piece of machinery that would make your business run more efficiently, maybe be able to help more clients or, do more, then, that's an investment. All right. So when we're looking to spend money at the end of the year, we're looking to invest in things, not just spend money. Okay. Because there's a difference between an expense and an investment. All right. So when you're like, I have all this money to spend, let's go spend it, make sure you're investing it, not just spending it frivolously. Okay. I feel like those are the only questions I knew that I had in here. Let me just peek again. Did I not answer this? I didn't answer that one either. So what happens when I go to 10 per minute? Okay, let me think. All right, I'll have to come back on that one. All right. Yeah, those are the questions I see from the most recently. Does anybody, I see that there's a few of you here. Do you guys have anything you want to talk about? Have anything you want to ask questions about? Anything at all? I'm here for another few minutes. If not, I'll let y'all go. But if you have something you want to ask about, pop it in the questions. I'll give you guys 30 seconds to throw me some questions. Well, I just peek and see if there's any other ones in this group that I missed. Let's see. All right, I don't see any more. I don't see any from you guys, so I'm gonna let y'all go early. So thank you for being here this week. I super appreciate it. I always appreciate when y'all show up. If you're watching this on replay, let me know you're watching it on replay. I appreciate y'all as well. And then next week we go back to our regularly scheduled programming. No, our new regular scheduled program. So Monday at 9 a.m. Mountain Standard Time will be our weekly training. And then at 9:30 on Monday, this is new. So right after training is over, we will jump in and do questions and updates. All right. So until then, have a good one, you guys. Have a great week.